Welcome back to another week of nuclear news, where we're staying on top of what is going on behind the scenes of the burgeoning nuclear renaissance and the uranium mining industry. So the price action of the Sprott Junior Uranium Miners ETF in the last 12 months, it's up 44%. The S&P 500, the broader stock market, is up 26% in that time. So uranium stocks still outperforming. Yes, there's been some underperformance recently, and the reason for that is the same reason all early stage high risk assets are underperforming the proven assets, because we're in the type of environment with high interest rates where early stage assets don't get access to capital, right? So it's harder for them to survive. Now, obviously, we're going to see the NVIDIAs of the world pump. We're going to see the S&P 500 carried on the backs of these powerhouse tech monopolies. But what we're doing is staying on top of the early stage assets, the undiscovered assets, the kind of assets that over the last 12 months can significantly outperform the S&P 500. Like, again, the Sprott Junior Uranium Miners ETF up 43%. Long term, can massively outperform the rest of the stock market. Can uranium stocks continue putting up massive returns? Well, that's why we stay on top of exactly what's going on in this space. And here's just one high-performing hedge fund, which is starting to notice the deep value in this space, right? Hedge fund making 20% a year for the last decade targets uranium mergers and acquisitions. That is probably the hardest thing to do on the planet, is make 20% a year consistently. So clearly this hedge fund understands things about financial markets, and they know where to find deep value. A top performing hedge fund is betting the pullback in uranium producer NextGen will be short-lived, as the industry's growing appeal leaves the startup well placed for a potential takeover, right? It's a strategic asset that once they get their final approvals, it's a very high likelihood that it would be a good takeover candidate for one of the majors. What they're seeing is the deep value that has been accruing to these junior and mid-cap uranium miners over the last few years. They've been stockpiling. Their properties are getting more and more valuable. The uranium they control is obviously getting much more valuable. What happens in those types of situations is the big players in the space start to realize the deep value and start to buy up these deep value junior uranium miners. That's obviously very good for the price action of the ETFs of these high quality assets. And here's a prime example of this exact same thing happening, right? Paladin acquires Fission, creating multi-asset uranium company. So that's not only very good for Paladin, becoming even more high quality, right? The more high quality properties you acquire, the more like Cameco you become, right? The more of a big player you become, the more cash you can generate. You don't need to be one of these tiny junior cap assets just struggling to survive. Now you have way more scale. So that is massive for Paladin. It's massive for the entire space, the entire junior mining space. Sharp uranium price rise on the cards if Russia weaponizes supply. Potential scene for warring country to disrupt supplies per gas playbook. So we've already seen them do this in the past, right? Limit the supply of oil and gas and cause prices to rise and profit massively. They can do the exact same thing with uranium. The West, the entire world, is still dependent on Russia. Yes, the West is sanctioning Russia, is moving away from it, but they could accelerate it. They could cause a squeeze all around the world if they want to. That is how sensitive the supply is. That is the opportunity in the space. Just need big players to understand how scarce the supply is, and it truly is that scarce that Russia can control it still at this point. India's nuclear power capacity increased by 70% in 5 years. What is that monthly rate, right? That monthly growth rate in India alone is something like 14 or 13% a year in growth and demand for nuclear. We are not seeing that type of growth in supply, especially when you factor in the other huge sources of demand that we've been covering for weeks. Not just India, that's just one country. Obviously, one of the biggest sources of demand is computer data centers. Altogether, data centers use more electricity than most countries. So all data centers in 2024 are beating Italy, Taiwan, Australia, Spain, Thailand, South Africa, Malaysia, Argentina, Norway, Belgium, and Austria, and many other countries. It's expected to start to rival India in demand, right? And India is growing 13% a year. So huge demand for electricity. Obviously, nuclear is going to be the source of that electricity. That's where the money is going. That's where Microsoft, Bill Gates, the US government, they're all investing in nuclear energy. So we're just getting started, right? And over in India, we have the United States, part of this big shift. Excited to be in Mumbai to discuss future collaboration to advance our civil nuclear partnership. Looking forward to a productive week of conversations to help collectively meet our clean energy goals. It's a coordinated effort globally to skyrocket the demand of nuclear. It does not get bigger than this. As an investor in the fuel that's going to be powering the world, right? Hydrocarbons, fossil fuels, in the grand scheme of human history, are a brand new technology. What happened to the investors in Exxon early on, right? What happened to the investors in oil early on, like John D. Rockefeller, right? The new fuel of the future is nuclear, and it's uranium, right? So that's the game we're playing. It is massive for the long term. California lawmakers fold in budget spat, approved Gavin Newsom's $400 million loan to Diablo Canyon, right? Pumping money into this space. U.S. Army seeks nuclear microreactors for reliable on-site generation. Does not get bigger than this, right? Brand new technology proliferating nuclear around the world. The U.S. Army contracting out, probably going to end up paying billions of dollars for a nuclear power supply. It is all powered by uranium. So speaking of the supply of uranium, obviously it's extremely scarce. We've been covering that for weeks. We have news out of Niger. The mines minister in Niger confirmed support for Global Atomic's DASA uranium project. So a lot of these assets over in Niger are selling off at deep discount, right? We have Global Atomic, we have GoVX. If the mines minister is confirming to support these projects, it is very possible these projects could do extremely well from here, right? In the deep value zone where they've just been selling off. So very high risk, but very high reward if these mines can actually start producing uranium one day. And this government has no reason to stop the production of uranium, at least in the near term. Yes, they could take over the mines one day, so it's extremely risky. But right now, they're confirming support. Just one corner of the world. Gonna have to keep you posted on what is going on with this space every single week.